Everybody is talking about how AI will change the world, but almost nobody is asking a very important question. What if we're already inside an AI bubble? Now, before people start, getting emotional in the comments, I want to be very clear, okay? Yes, AI is real, AI is transformational, and AI absolutely will shape industries. And in many cases, it has already done this. But that does not automatically mean every AI company is worth billions of dollars because history has already shown us something very important. Revolutionary technology can still create irrational markets. We saw during the dot-com era, we saw it during the crypto hype cycles, okay? And now many investors are asking if we're seeing similar behavior again with AI. So today, I want to break this down logically and strategically, okay, in a calm manner, okay, not in an emotional way. Because understanding the difference between real innovation and speculative hype may become one of the most important investment skills of this decade. So let's go ahead and get into it, right? So, first, let's understand why this is happening. Right now, AI is attracting one of the largest capital waves we've seen in years. Massive firms are investing billions. They're investing billions into AI infrastructures, chips, cloud computing, data centers, automation, enterprise AI software, and honestly, there is a reason for it, okay? Because AI can reduce labor costs, as we know. AI can increase productivity, as we know, automate repetitive tasks, improve operational efficiency, scale businesses faster, become present. Well, I'm just playing. Okay. But based on what I was saying, that's real value creation. Okay. Now, that is why companies everywhere are racing to integrate AI into their operations. But here's where things start getting dangerous. Once investors see massive opportunity, speculation then enters the market. And suddenly, excuse me, every company starts adding AI to their branding, whether they actually have a defensible business or not. And that's when hype begins separating from fundamentals. Now, let's talk about the dot-com bubble for a second, okay? A lot of us that are old enough, we understand that. But the parallels here are important to notice. So during the late 1990s, if you don't know, the internet was absolutely revolutionary, okay? And investors were correct about one thing, okay? The internet did, in fact, change the world. I'll give them that, okay? But the problem was this. People started believing every internet company would then automatically become valuable. And that simply was not true. Thousands of companies raised enormous amounts of money with weak business models, no profitability, no clear demand, and also unrealistic valuations. Eventually, reality began to catch up. And when the bubble bursts, okay, trillions of dollars disappeared. All right. Now, this part is important. The internet itself survived, right? As we know today. This is how you're hearing me talk right now. Okay, the internet survived. And it also became dominant. But many overhyped companies in that dot-com era did not. And that's the lesson people need to understand about AI right now. Now, let's talk about some warning signs smart investors are paying attention to. And if I'm talking to a smart investor, you're watching this, you're a smart investor, I think you need to pay attention to this as well. Okay, so I need you to dial in here with me. Now, number one, massive capital spending. Major tech companies are spending hundreds of billions of dollars on AI infrastructure right now. Number two, sky high valuations. Some companies are trading at prices that assume near perfect future growth. Number three, weak differentiation. Many, and when I say many, I mean many AI startups are essentially using very similar models with very little competitive moat. And number four, fear of missing out, right? This is a huge one, okay? When investors start deploying money because they're afraid of being left behind, okay, markets can become irrational very quickly, okay? Now, it doesn't mean that AI is fake. Excuse me. It just means that pricing can disconnect from reality temporarily. Now, the smartest, excuse me, the smartest investors are not just chasing flashy AI apps, okay, or applications. They're investing in the infrastructure behind AI, okay? Now, that includes data centers, okay, that works behind AI, power generation that works behind AI, fiber networks, GPU infrastructure, cybersecurity, enterprise systems, automation systems. Now you may say, Ant, well, why are they investing behind AI? Why are they paying attention to this? Okay, well, because the infrastructure behind AI actually produces long-term demand, regardless of which AI app actually wins here. Okay. This is similar to the gold rush analogy, right? During the gold rush, some people made money digging for gold, but many of the biggest fortunes came from selling the tools, right? Selling the equipment, okay, and also the infrastructure supporting the miners who was the ones digging for gold, okay? So that's exactly how many institutional investors are approaching AI today. Now, I want to ask this question, okay? How much of today's AI spending will actually produce sustainable long-term profits? That was a question that I also asked myself. I was sitting and I was like, well, how much of today's AI spending will actually produce sustainable long-term profits? Okay. Because adoption and profitability are not the same thing. Okay. A company can grow users rapidly and still struggle financially. It's just the truth. And right now, many AI companies are still trying to figure it out. Okay. Monetization, pricing, power, defensibility, and long term margins. That kind of uncertainty is what creates risk, especially when valuations get extremely aggressive. When I say aggressive, I mean extremely aggressive. Okay. Now, if you're watching this and you're an entrepreneur or you're a business owner or you're an investor, here's a lesson here. Do not build your business around the hype of AI. Okay? Build it around solving expensive problems. Because eventually markets stop rewarding the excitement. Hmm? And they start rewarding execution. Okay? Think about it. The companies that survive long term are usually the ones with recurring revenue, strong margins, operational efficiency, loyal customers, real world utility. Okay. That's what smart capital ultimately looks for. Okay. Not just attention, but durability. So, is AI a bubble? Maybe partially. Is AI transformational? Absolutely. And both things can be true at the same time because revolutionary technology often creates irrational investment behavior before the market eventually matures. The key is learning how to separate the real infrastructure, real cash flow, real utility, and real business models from pure speculation. So, If you enjoyed this video breakdown, subscribe to Quantum Advisory Group for more content around private equity, mergers and acquisitions, capital trends, or AI trends, okay? And where smart money is actually moving. And comment below, okay? I want your thoughts here, okay? Because I just want to ask you this. Do you believe AI is the next industrial revolution? Do you believe AI is the next industrial revolution or just the next major bubble? Okay. I will see you in the next video. Take care, everybody.